Hello everyone. In today's class, we are going to speak about technical analysis. The fundamental analysis concept is done. So this is the next step. So in this particular aspect, I can't go for each and every aspect in detail because of lack of time. I am going to inform you some of the basic information, but make sure that these informations are enough to transact in the capital market. So what the technical analysis will tell you. So technical analysis will give you the confidence to take the decisions on buying position and selling positions. So what position you are going to take? Long position is buying position, short position is selling position. Okay. So what would be the price in tomorrow? So that should not be exact price, but it may be somewhere around for sure. Okay. Technical analysis is the attempt to forecast the stock prices on the basis of the market derived data. The market which will give you some of the informations on the basis of the market derived data, you are going to analyze the market. Technicians, also known as the quantitative analysts or chartists. See here, the use of management science and statistics will come. Okay, so technicians or the quantitative analysts will prepare some of the charts. They will look at the price, value and psychological indicators over the time, and they will prepare some informations about the capital market. By using that informations, we can decide what would be the price tomorrow and what we should do, buying the security or selling the security. So the meaning of Wikipedia: technical analysis is a security analysis discipline for forecasting the future directions of the prices through the study of past market data, primary price and the value. So by studying the past market data, primary price and the value, we can analyze the market. So that analysis is called technical analysis. So John J. Murphy, one of the financial specialists, will say technical analysis is the study of the market action primarily through the use of charts for the purpose of forecasting the future price trends. To determine the future price trends, we are going to analyze the market by using charts and trends. Technical analysis is the method to predict the future behavior of the securities with the use of past data. So you can write this particular sentence at the end of the introduction. So let's understand how technical analysis can be done. Fundamental analysis, there are three steps we gone for: the economic analysis, then industry analysis, then we came for the company analysis. Okay. Under technical analysis, we are going to study about the theories of the technical analysis, then charts and moving averages. So under moving averages, you have some practical problems too. So let me to introduce about the charts first. So before going for the charts, we need to understand the trend. Trend is nothing but the movement. Okay, it may be upward movement, it may be downward movement, or it may be flat movement. Fine. So do chart speaks. Here is the Jet Airways chart. Even the table is also given. Will it speaks? Obviously, you can check the movement here itself. Here is the high price you can identify. Here is the low price you can identify. And in the long run, from the 2009 to 2014, almost at the end of the 2014, the Jet Airways prices are decreased. You know the issues of the Jet Airways, right? So the prices are decreased. They are lost their reputation and even their market. So this is another example. Consider the basic assumptions presented by Robert D. Edwards and the John Morgie in the classic book Technical Analysis of the Stock Trends. So their assumptions are: stock prices are determined by the society by the interactions of demand and supply. Stock prices tends to move in trends. Okay. Then shifts in demand and supply cause the reversal in the trends. So demand and supply shifts will be affected for the reversals. Okay. Then shifts in the demand and supply can be detected in the charts itself. So we can check the shifts in the demand, correct? When the supply is more than the demand, then the prices will decrease. When the supply is less and the demand is more, then the prices will increase. Chart patterns tend to be repeat themselves. So chart patterns tend to be repeat themselves, means the patterns are here. See, this is the increase, once again decrease. See, once again the increase, once again the decrease. Like this, the patterns will be repeated. Okay, that is what is said by the Robert D. Edward and John Margie. Okay, so they have written the books Technical Analysis of Stock Trends. So there they are mentioned about this particular aspects. So technical analysis is based on the major assumptions or the trends, market trends, that is. On the basis of the market trend, we are going to analyze the particular economy or industry or the particular company. Traders and investors hope to buy a security at the beginning of an uptrend at a low price, ride the trend and sell the security when the trend ends at the high price. So the traders will hope to buy the security at the beginning of the uptrend. So this is the beginning, or here also you can say beginning of the uptrend. The traders would like to buy the stocks and at the end, okay, at the end of the high price, here or here at the end of this particular point, the traders would like to sell their particular securities. Although this strategy sounds very simple, implementing it is exceedingly complex. So this looks like very simple, but implementing it is not easy one. So if you got the whole chart, fine, you should buy in this particular period, you should sell in this particular period, and you should not wait up to 2012. Okay, you can assume that. Let's say you are in 2009. So how will you know about 2011, 2012, 2013 and 14? You don't know about that particular aspects. Okay, what is going to be in the stock market? That's why we are going for the fundamental analysis and the technical analysis. By checking these all trends, we are going to determine the future price. So determining the future price may be right sometimes, may be wrong sometimes. So if it is the right one, then you will be benefited. If it is the wrong one, then you will lose your investment wholly or partly. That's it for today's class. In coming classes, we are going to speak about different types of charts.